On today's episode of the Cryptoverse Market Roundup, Amisa Go enters the top 20, Ethereum starts pulling its price back, and we'll have a look at various price charts. So stay tuned for that. Hi there guys, welcome to the latest episode of the Cryptoverse Market Roundup. I am your host, Chris Coney, the founder of Cryptoversity, the online school where you can learn about Bitcoin, cryptocurrencies, and blockchains. Find out more at cryptoversity.com. So let's go over to CoinMarketCap to begin the market roundup before we get into the chart readings. Now I've highlighted a few, when I highlight in orange, that is where I'm looking at very highly traded coins. Now Ethereum is up near enough 11% today. I've highlighted it in orange because it's got nearly $2.3 billion of trading volume. That's quite a bit. It's actually the biggest overall. But I've also highlighted Ethereum Classic and Neo because they are also amongst the altcoins, some of the most traded altcoins today. So we've got near enough $115 million of Ethereum Classic and Neo have been traded. And they're sat there in 9th and 10th position by market cap. There is a significant gap in market cap though. Ethereum Classic is a good $500,000 ahead of Neo in terms of market cap, but I've highlighted those two in orange because of the amount of coins that have been traded. Moving on from there, the biggest loser in the top 20 today is NEM. It's down 7.38% to 27 cents, but it still remains 6th place with $2.5 billion market cap. From there, we also have the biggest winner of the day. In 17th place, it's Zcash, up 15.14% to $246. And I don't know if you saw me, I think I retweeted this. WikiLeaks announced on their Twitter feed they now officially accept entirely anonymous Zcash donations in that very cryptocurrency. I mean, who else would adopt Zcash? It does beg the question why they didn't choose Monero. That's a question I had. Why wouldn't they choose Monero first? It's a technology that's been established a lot longer, it has a higher market cap, and so on. So why choose Zcash? I don't know. Let me know in the comments below why you think that is. And then I've given the honorable mention today to Amisa Go because it now has entered the top 20. With an 11% gain, it's now at a $346 million market cap. That puts it above Steam and puts Amisa Go in 19th place as the most capitalized coin. So an Amisa Go is now $3.52, and they've got an interesting project going on there. They are targeting it to empower the unbanked. They've got all kinds of systems going on there. They've got a point of sale system and various other things going on there. It's built on Ethereum as well, so that's a good thing for Ethereum. If what's good for Amisa Go is good for Ethereum. So that's all I've got in terms of the price movements for the day. Let's move on to the chart reading, courtesy of Coinigy. Link in the video description if you want to sign up for a Coinigy account and trade from the charts. That's one of the best features. So here's Bitcoin Cash. Very little data so far, but I drew the Fibonacci retracement lines as a bit of a joke. It's funny because it's based on so little data. I'm really not expecting it to be meaningful for a while until it builds up a bit of history. If Bitcoin Cash is trading right now at $325.85, it's going a bit sideways from where it was yesterday after the big jump the day before. Bitcoin, however, I redrew my Fibonacci retracement lines here to the most recent price move, which was from the 16th of July right up until a big boom on the 5th of August. So I drew it on the high of that day, and what you'll notice from today and yesterday is that the lows of the day are sat right on that top line of the Fibonacci retracement lines. The price it's sat on is $3,339.50. So while that was the high price from the 5th of August, that was the resistance line. It was broken on the 7th of August, and now 2 days on the trot, it's been tested for support, and it is holding. That is fascinating. So keep an eye on that. You know me, 3 tests on a line for confirmation. So if that happens again, then I'm going to be really excited about that being a new floor for the price, barring nothing catastrophic happening. It seems reasonably optimistic in the Bitcoin world right now because SegWit locked in yesterday and now we're on the road to activation. So clear road ahead for Bitcoin. Moving on to Dash then, I've drawn this $210 line that I spoke about previously. I said this was the line that had the most interaction at $210, which was, for me, the more confident target for Dash. Since then, it's been coming up from, where did I say to get in? 183.50, and now it's been gently moving up, and I've drawn that horizontal white line as a thin white line to show where the next target is. So I would expect, for the time being, a consolidation in between these two levels, just based on historic price analysis. And until the 50-day moving average is coming up here, you see it was support back there on the 31st of July. And if it comes up to inside the channel here, between 210 at the top and 183.50 at the bottom, then that might start actually pushing the price up and be in a moving line of support. So we'll wait and see if that happens. But in the meantime, I expect some toing and froing going on inside that particular channel. Over to Ethereum. Now, Ethereum has finally got its mojo back, it seems. It's broken two key levels recently. The previous one that I was talking about as a target was the 38.2% Fibonacci line, which is $286, and then that was up from the previous line of resistance, $248. It's broken both of those and is now sitting right up there at $302. It's probably quite a bit of breath of fresh air for people who maybe lost some money in the great crash of 2017 for Ethereum. We've retraced, I think I've drawn this the wrong way around actually. What I could do with this, my Fibonacci retracement lines are still based on the gains from the big boom of 2017. If I delete that and then redraw it based on the crash, this will give us some more meaningful data. Now, I do like to be precise with them. So, I bring up the settings here, and then if I highlight the high price, you can leave your cursor in there and then wave it over the candle you want, and then look at the high and then type in 412.21 as the top, and then highlight the second price of the Fibonacci retracement lines, enter the low 136.12, pop that on there, lock the chart. Need to save this, just make sure I save it. Sometimes when I do these chart readings and change them right in front of you, I finish the recording and then I forget to save it, and then I have to redraw them again later on. So this is now more meaningful because what we're looking at, we call them Fibonacci retracement lines, is because it's like retracing, it's going back the other way that the price has already gone. So if we take the big crash of 2017, which is here from the $412 price, which crashed right down to 136, now it's starting to rebound. We can see what percentage of those losses have been recovered. And so far, we have recovered at least 50% of them. Right, when we got to $274, that was 50% of the losses regained. And then, actually, this is now more meaningful. Today's candle, the reason it's got a big head on it is because it's hit the next Fibonacci level, which is 61.8% retracement. And that price is at $306.75. So that is the next point to break for Ethereum's rally to continue. So that's I'm going to keep that on there now because that is the new set of figures. And furthermore to that 50% level, the 274, that was the level it broke out of yesterday quite significantly. And previous to that, it was causing it a bit of resistance. So I should have redrawn these earlier actually, but I waited until we had a definitive turnaround. When it was consolidating here in the middle of July, that may have just been a pause before it continued to fall. But now we've got a concerted effort on a bull run here. That's why I've redrawn them so we can watch ourselves regain all of those losses right back up to $412 and perhaps beyond. I've added IOTA here to my suite of coins because I check CoinMarketCap every day and it's hard to get the full context of where the price is going if you just see it day to day. One day it's up 5%, next day it's down 12, up, whatever. And you don't really get an overall sense of the direction. But when I did look at this, IOTA is also now on the up. So I did the similar thing to what I've just done with Ethereum there. I've drawn the crash of IOTA down from 63 cents all the way down to 14 cents. And now it's coming back up again. So in terms of where it's at, IOTA has already recovered 78.6% of those gains, of those losses. It's regained 78% of those losses. And today, if we zoom right in, the low of the day is testing that level. So 78.6% Fibonacci level is actually a price of 52.5 cents. That's the point it's just tested. Yesterday we broke above it, today we're testing it, and if this holds support, we may be on our way back to 63 cents for IOTA. Litecoin then, zooming out so I can see the fuller context of this, I've drawn the $50 mark back as a thinner line. You remember the other day I said that I had more confidence in the price going up to 47.18. Well, I was pretty spot on with that because that was a resistance line and it took a big candle like yesterday's to break out of it. And now the price is sort of sitting, taking a breath for a second there, and now it is looking at that next resistance level of $50. So that would be the next thing to break. How confident am I that it's going to break $50? I am reasonably confident it's going to break $50, given that, the rising tide lifts all ships, and now Bitcoin is going to be dragging, Bitcoin's price is going to keep going up, no doubt about it, and it's going to drag everything with it. So I expect Litecoin to benefit from that as well, and not to have too much trouble breaching $50. Finally, I've got Monero down here. I've also got Ripple now on my Bitfinex list. Look at Monero right now. Monero is also on the run, having broken out of, let's see what level it's broken out of here. That's the 23.6% level is actually $50. We spoke about this the other day. So I keep doing this with Monero, forgetting to move away from that big bit of data that screws up the chart. But now Monero has broken out that $50 level. It's trading right now at 53.33. That's pretty good for Monero. It's nice and look at the reasonably similar sized candles. This is like a little 3 white soldiers pattern, which is a momentum pattern. And what would be the next target? I think I talked about this before. Let me draw it on the chart. Around about, I'm going to go for $57. I'm going to draw it right there, and I'm going to change the settings to put it spot on $50 exactly. And I'm going to lock the chart at that point. So that's where I reckon Monero is going to go. And that would be the next test for it, to see if it can break that as resistance. So if this were a trade, getting in at the $50 mark would be the entry. It's a bit late now, by the way, but the time I would start taking profit or moving up my stop loss would be as it approaches $57. Because if it turns around at that point, fine, then the trade will get stopped out at a profit anyway. But if it breaks it, fine, then we can carry on locking in profit as it continues to move up. I generally, when it's on a run like this, would create a trailing stop loss. So you'd move up your stop loss for every 2 winning days to the low of the previous day. So finally, onto Ripple. I don't think I've drawn any indicators on this yet, so I will do that as we go on. I'm not quite sure why Bitfinex does this, but the first candle it lists in the data set has a great big range on it. It's almost like from infinity and beyond, but obviously I can't draw any indicators based on that because it wouldn't be very meaningful. What I could do though is, again, favorite tool, Fibonacci retracement lines. So I could draw this crash here as Fibonacci levels and see if that makes any sense. Kind of does. As we zoom in here, we can see it's obeying it quite well. But we'll leave these here, and then we'll see what happens as it moves on over the next several days. I'm not even particularly interested in Ripple, to be honest. As I'm interested in it in terms of what the project is doing, but I've never bought any Ripple. I was going to say I don't see a future in it. Of course, there's going to be a future in it, but yeah, I'm just not particularly interested in it. It just doesn't move me emotionally, so that's why I'm hesitating to analyze it, because I'm not a big Ripple fan at all. That's not a very objective way of looking at things, but that's just the way it is. All right, thanks very much for joining me today, guys. If you like this episode, go ahead, hit that like button, and if you're new around here, get subscribed. And if you would like access to my very best material, such as my structured online courses, that will train you how to make and save with Bitcoin, check out cryptoversity.com. Alright guys, that's all for today. I'll be back later on with the news and commentary show. And of course, I'll be back tomorrow with another edition of this Market Roundup show. So until then, it's me, Chris Coney, saying bye for now.